Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. French President Emmanuel Macron gives his outgoing Prime Minister 48 hours to negotiate with rival parties, giving Macron a little more time to figure out his next steps. President Trump signals the door could be open for healthcare talks with Democrats, but still insists political rivals must allow the government to reopen first. Plus, gold continues to march towards $4,000. Meanwhile, US and European futures are subdued after the Nasdaq closed higher, boosted by AI trades.
Well, speaking of those subdued futures, we take a quick look at the markets here because, as Anna said, we are going nowhere in a hurry. Some slight underperformance in the FTSE 100, down about 0.1%, but nothing I would write home about just yet. I would say our focus is firmly on the U.S. 10-year. As we go into a prolonged shutdown, we're talking about changes to the labor market, potentially permanent changes to federal jobs. The bond market hasn't blinked yet. 4.15 on the 10-year, euro dollar at 1.16. The countdown to the opening trade starts right now.
Tuesday morning, good morning. Do you have AI FOMO? Is that what is guiding your portfolio right now? What do you think about gold? We're approaching 4,000. What is that telling you about the state of the world? Are those two things contradictory? And what do we think about the political situation? Kriti was just talking about what's happening in the States, but France is nearing political meltdown. We may already be there. What happens next is anybody's guess. Emmanuel Macron is facing some tough decisions.
Yeah, absolutely, Guy. He certainly is. He hasn't got any easy options here, that's for sure. Let's get an update from Paris, shall we? Let's go to our Bloomberg colleague, Caroline Conan, who's in Paris for us, of course. And Caroline, I think you have camped yourself outside the French Opera House, which, given the news flow, perhaps is appropriate.
Yeah, I mean, the sound of music from Emmanuel Macron will be interesting tomorrow night for the grand finale. After these 48 hours is given the Prime Minister, the outgoing Prime Minister, Sebastien Lecornu, to try and come up with some kind of platform of stability. Look at the front pages of the newspapers this morning. Is there anyone here? That's the front page from Le Parisien, as this French government only lasted 14 hours. These are the front pages. Macron back against the wall. Of course, he is back against the wall because he has only three options left. One is obviously naming another prime minister, possibly a socialist one. This time, this is what Olivier Faure, the first secretary of the Socialist Party, was calling again last night on prime television. But Bruno Retailleau, the Republican leader, said this is out of the question for them. So it's kind of hard to see that this would be the best option. Of course, another option would be calling snap elections. And this is actually what Emmanuel Macron is threatening to do, to dissolve Parliament one more time, even though some of the MPs in Parliament may not have that much interest in going back to the polls because they may lose their re-election. And of course, another option is resigning. At the moment, he's still ruling that out.
Caroline, thank you very much. Caroline Conan in Paris. And I mean, it does kick the can not very far down the road, doesn't it, to Wednesday. Gives the guy who's leaving, who's not going to be Prime Minister for very long, just another couple of days till Wednesday evening, in the words of Emmanuel Macron, to take some action, develop a platform for action and create some stability for the country. That seems very difficult to achieve. Caroline went through a couple of those newspaper headlines. I was taken by Le Monde, which talks about a major crisis opening in French politics. And it does seem as if we get baby steps, very much, closer to this crisis. But 85 basis points on the spread over German bonds, is that a crisis or is that a crisis in waiting?
And in the meantime, the euro dollar hasn't really blinked. I think when we tend to see that spread move, there's a little bit more action in the currency. To be fair, I think we saw a bigger move when you were breaking it on the show yesterday. But the fact that we're still at those elevated levels, I think, is pretty significant. I'm curious to see what happens on the defense spending front. That was Sebastien Lecornu's kind of role prior to taking on the prime ministership. There was a thought that he would really amplify some of that spending and the defense priority, which already exists in Europe. Does that change now? I don't know.
I don't know. That all feels kind of too granular at this point. France is facing a significant problem. I don't see how it gets out of it. Are early elections, parliamentary elections, going to change that? Do you need a presidential election? If you get a presidential election, what do you end up with? If you end up with a far-right government that the market doesn't have faith in, do you end up with the ECB having to come in to stabilise the situation? You're starting to see the bigger steps further down the road beginning to emerge at this point. Are we in a crisis yet? Maybe not. Are we going to get to a crisis? You can certainly see a line between now and then and how you get there. Christine Lagarde's talking about the euro being a bastion of stability. Doesn't feel like it this morning.
Does he try one more prime minister? I mean, or many more prime ministers before he calls an election? We'll wait and see. But he hasn't tried anything other than the centre-right so far, really, in this parliament. So does he try and make it the problem of other parts of the National Assembly? That would be an interesting dynamic. Whether it changes any of the arithmetic, we'll see.
Well, you talk about it being a crisis. The last time, I say the last several times we've had this go on, we've had the conversation with economists and with ECB officials as well about what requires intervention from the ECB. And that was what was defined as a crisis. I haven't heard that kind of commentary or even that being broached by the markets yet.
The perception is that France is too big to fail, right? Sure. So you can't, it's not like Greece.
But the ECB isn't worried yet. Should they be?
Should they be? I don't know. Christine Lagarde says probably the worst job in the world at the moment is being the French president. So I think that tells you that she is aware of the risks of what is happening in her home country. The risk is definitely there and growing that some kind of a support is going to be needed. The market at the moment perceives the fact that France... The reason why maybe we haven't seen a bigger spread blowout at this point is because the market perceives the ECB as being behind France.
Yeah.
Is that true? How would that work? Would it come with conditionality? What would it look like in terms of French politics? We're not there yet, but you're starting to ask these questions about what is happening in France, because at the moment, there doesn't seem to be an easy route out.
We're not there yet on the end of the shutdown in the United States, Chrissy. Are we even a step closer? There was seemingly a slight olive branch offered by President Trump overnight, but, maybe only briefly.
I think at this stage we'll take a millimeter of hope if we can. I think what's interesting, comparing the French and the American situations, I learned this. So there is a loophole in the French Constitution, and I think this hits in January, where basically you can pull over the budget.
They used it this year.
Right, exactly. I think it's called I remember learning the pronunciation. It's called the Loi Spéciale. I think I did that right.
Special law.
Thank you. It's the only French words that I know, which I think says something. The U.S. has no such loophole, which means that they can be shut down for a very long time. They had a Senate vote yesterday, which tried to get a bill across, which tried to get some health care, dead in the water right out of the gates. They're trying to have a conversation, at least according to the president, between Republicans and Democrats. That was shot down very quickly. I think Caroline Leavitt, the press secretary, said that we may still have a way to go before those negotiations, that conversation even happens, which actually increases the odds of a more permanent workforce layoff when it comes to the federal labor. What the timeline looks like on that I don't know.
Buy gold. Seems to be the answer from the markets on this. It's really hard to read what is going to happen here, what the ultimate solution is going to end up being. But it does seem as if Trump, to your point, put an olive branch out there and then came back and basically said, yeah, but if we're going to talk, you need to reopen the government first. And the Democrats are like, no chance. And the market has perceived that as being something that signals a long-term trend. So the instinct seems to be to buy gold at the moment, on France and in the United States.
Government instability everywhere. You talked a lot about Japan, no doubt, yesterday. 4,000 on gold is not that far away right now. We're about $38 away from that at this point. Goldman Sachs has a new target on gold of 4,900. Ken Griffin speaking to us yesterday, saying that he's worried that this is increasingly being seen as an alternative to the dollar, which ties it back to the shutdown story and policy there. Yeah,
normally you'd buy treasuries. Normally you'd buy the crisis. The irony has always been when you have a US government shutdown and all hell's breaking loose in Washington, you buy the dollar. Not so much now. Now you buy gold. So is gold the new dollar, to Ken Griffin's point? I think that's a really interesting point that he made in that conversation with Fran. How does it work going forward? Is this the new trend? Because there's other factors kind of pushing that momentum trade, and everything seems to be a momentum trade at the moment, which takes us to the AI narrative as well, which definitely feels like a momentum trade at the moment. Really big valuations, momentum's in the market. That's what's driving us at the moment. We had this OpenAI event yesterday. Obviously, that was kind of in the wake of what we saw with the AMD deal that was done, which again, kind of, I dig into the details of that. That's absolutely fascinating. But we're now at the point where OpenAI has the NVIDIA effect.
Yeah.
So you mentioned another company, its shares go up.
And I think a host of sectors as well.
In a range of different businesses. So I think that was one of the key takeaways from yesterday. But the biggest takeaway to me from the OpenAI event yesterday, and we'll park the AMD deal for the moment, was that they're now starting to figure out how to monetize within the system. And we talked about this last week. If you can keep some of the transactions that OpenAI is producing within your ecosystem and take a tax effectively on the back of that and become an e-commerce site, then the funding model starts to make a little bit more sense. around OpenAI.
Yeah, we showed the Figma share price. That was one of the companies that was referred to yesterday. HubSpot was also referred to. Expedia, TripAdvisor in the leisure travel space. Mattel going to use OpenAI for quicker product design.
The OTAs, the online travel agents, are a fascinating part of this. I just came back from an event last week in Rome, and this relationship between AI and the OTAs is really interesting at the moment, because everybody sees OpenAI eating the OTA's lunch. Because why do you need you get an online travel agent that's your personal OpenAI assistant? Why do you need to go to an online travel agency? That's the kind of ecosystem disruption you're going to be seeing here. Yeah. And if OpenAI can capture some of that revenue, then who cares if you're paying $20 a month for it? Well, that's where the revenue comes from.
It is interesting that it was those share prices that popped higher yesterday because OpenAI talking about those businesses using its app API to design their own AI-enabled apps. So at the moment, at least, maybe we can't answer that question about who wins.
But where does the revenue fall within that model? I think is and the fact that OpenAI feels like it's in the driver's seat. The OTA share prices have been hit pretty hard because of people being worried about this relationship.
It begs the question of what a OpenAI on the public markets would go for. I'm very curious about that valuation. Speaking of valuations, Paul Tudor Jones, the very famous billionaire, of course, compared it, classic fashion, said it feels like 1999. That's where the party's going. Bulls of the argument who are going to say this is still going. It's actually that this is backed by infrastructure investment and partnerships, et cetera. So two sides of the coin that I'm sure we'll dive into the show.
2025, isn't it? That gold is nearly 4,000 and US stocks hit new records.
1999 was much more fun. OK, let's talk about what we've got coming up on the show. Sri Kojagoda, Aberdeen Senior Research Economist, is going to be joining us. Matt Gill, JPMorgan co-head of tech investment at EMEA over at JPMorgan, is going to be joining us a little bit later on. Talking to Tom, actually. That's going to be a great conversation. He's got some great conversations lined up throughout the show. Elise Badois, City Head EMEA Research, joining us, and to discuss the fallout in France, Maria de Mertzis, the Conference Board Economy, Strategy and Finance Centre Europe leader, is going to be joining us, and Kevin Thozé, Carmignac Gestion Portfolio Manager, joining us to talk about the markets and how the markets are reacting to all of this.
Plenty of data and Fed speak, I should say. ECB speak, I think is a better way to put it, throughout the day. 5:10 p.m. UK time. Christine Lagarde speaking at the Business France event, Business in Europeans in Paris. She is going to be, I imagine, asked as well about the crisis in France and where to go from there. We were discussing it just moments ago. Plenty of Fed speak as well. To be sure, Fed Governor Stephen Miron is going to be hitting the wire. Michelle Bowman, of course, the hawk on the committee and vice chair for supervision, also joining, or I should say those terminals, or those headlines are going to be crossing the terminal. Minneapolis Fed's President Neil Kashkari also speaking separately. Lots of Fed speak here. Are they worried about inflation? Are they worried about the effect when it comes to the job market? And then, of course, I think the highlight maybe for Bloomberg programming today, JPMorgan's Tech Stars Conference, that happening today and tomorrow. Our very own Tom McKenzie is going to be live on the scene.
With who? That's the critical question.
Lots of people.
Great guests, culminating in Jamie Dimon a little bit later on this afternoon. That is going to be a fantastic conversation. What else do you need to know this Tuesday morning? Egyptian state-linked media has reported the first round of Gaza talks between Hamas and Israel mediators have ended amid what has been described as a positive atmosphere. Today, of course, marks 2 years since the Hamas attack on Israel, when 1,200 Israelis were murdered. Since then, more than 67,000 Palestinians have been killed, according to the Hamas-run Health Ministry. Donald Trump and the Brazilian leader have finally spoken over the phone after a months-long standoff. In a social media post, President Trump hailed the talks as, quote, very good. Crucially, he made no mention of Jair Bolsonaro, whose trial on coup attempt charges inspired Trump to impose 50% tariffs on many Brazilian goods earlier this year. And Orsted has raised $9.4 billion through a rights offering as the company tackles the downturn facing the wind power industry. The fundraise, the biggest for a European energy company in over a decade, will allow the state-backed Danish firm to shore up its balance sheet after the Trump administration upended its business model. The company says demand was, quote, extraordinarily high after investors took up 99.3% of the shares offered.
A story we will turn to later in the programme. Coming up on the programme then, Germany extends EV tax exemptions in a potential boost for the auto sector. We will check on those stocks at the market open. Plus, we'll keep an eye, of course, on the French luxury sector. As some analysts say, it's too early to go all in. Interesting analyst update. The timing of that with French domestic politics of interest, of course. We'll watch bond markets when they open in around 15 minutes' time. Up next, Citadel's Ken Griffin is concerned about the gold trade. We'll hear from the fund manager and talk markets. markets. If you want to get involved in any of these conversations around this desk, IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
As you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me.
Citadel CEO Ken Griffin speaking to Bloomberg. Let's get to Bloomberg's Valerie Seidel, who's been thinking about gold and much beyond. Good morning, Val.
Haven't we all been thinking about gold since its rip-roaring rally unleashed in the month of August? We are now up 51% year to date. And as Ken Griffin was alluding to there, if you've been a dollar investor, your purchasing power essentially has been eroded by 50% in 10 months. I thought it was interesting that Ken Griffin wanted to hang his hat around the story that gold's rally is still all about de-dollarization. U.S. investors, global investors wanting to diversify away from the U.S. dollar, no longer seen as the safe haven. Gold is now seen as the new safe haven. This is also chimes with some data we got overnight. Official reserves of China. Gold has risen now for 11 straight months, and that comes alongside a drop in their treasury holdings. So we are seeing it from one of the world's largest central banks, a diversification away from treasuries into gold. But while we're talking about debt and these angst around the world, we have to mention what's going on in France. I thought it was very interesting to put in perspective the French budget deficit currently at the moment, widest in the Eurozone, yes, but they've really failed to bring back the budget back in line since the COVID era. Back in 2020, their budget deficit reached around 9% of GDP. It is still hovering very high, around 5.5% for this year's figures. And the longer we have this instability going on, the longer we essentially don't have a government to deal with it. And that is what the bond market is worrying about. The current premium from OATs over bonds stands around 85 basis points. But Guy, the real worry in the market's mind is this could be lasting damage to the French bond market.
Absolutely. We're now north of BTPs. How much further do we go now we've cleared that hurdle? Valerie, thank you very much indeed. Let's try and answer some of these questions. Shri Kochagovida, Senior Research Economist at Aberdeen, joining us around the table. Good morning. In some ways, you could argue, given what is happening in France, the bond market is behaving quite well. And I wonder whether that's because there's this assumption within the market that the ECB's got France's back. Now, that's a big leap to kind of go from one to the other. But if we don't get political clarity sometime soon, is that going to be tested? Is the bond market going to look at this story and go, we've kind of played our part so far, now it's up to you, and if you don't play your part, we're going to rip this forward? And at that point, does Christine Lagarde need to get involved?
OK, well, I think what's happening at the moment, 85 basis points OAT bond spreads,
Yep.
I think a lot is priced in. It's almost like what's happening now isn't a huge surprise. So as you say, it's fairly well behaved, but that's because there was an expectation that they were going to struggle to do anything about the deficit. The budget arithmetic stays the same regardless of who the Prime Minister is. So that's one aspect of it. There is a chance that, given everything that's happening at the moment, there is a chance that you could start to see spreads blow out towards 90 basis points.
Yep.
For it to go much further than that, you would need to see something a bit more drastic. Perhaps Macron steps down, which is, again, very not expected at the moment because he has consistently said he won't. I'm not saying that it's not going to happen, but because he's been so clear and firm, markets are not expecting it. So something like that would lead to a further widening in spreads. But in terms of does the ECB have France's back, I think the ECB is there for financial crisis. We had the Euro area sovereign debt crisis. A whole host of measures were put into place, evolved over time. Those can all be reenacted quite quickly if necessary. But what we're seeing at the moment, the budget maths is actually, quite manageable if they could get through the political deadlock. It's quite simple. You need to cut spending.
Cutting spending in France is simple.
But that's the problem, exactly. So if you just look at it in terms of when does the ECB step in, you would step in if there was a severe financial crisis that would lead to spreads blowing out meaningfully, spillovers to the rest of the Eurozone, and right now it's very contained. So it does seem like we have this continued stasis. You will expect the budget to be rolled over temporarily again, just as they did last year, and this noise continues for now, is what's being priced.
To your point, it's that kind of what I'm hearing is that we're not at crisis levels just yet. It's bad, things aren't looking good, but we're not at crisis levels just yet. To your point, though, we haven't really seen a shift in necessarily investment confidence when it comes to France. When it comes to actually affecting business investment or actually increasing taxes and that fiscal spend or that fiscal investment that may come from abroad, does any of this weigh on that?
I think longer term, yes, it's going to have.
But it's been a couple of years of this chaos, no?
Yes, it's true. It just seems that there is this sort of stasis where it's not having a major spillover onto the economy. But longer term, in terms of potential growth and investment plans, it is going to be very difficult to sort of look at French assets at the moment. What we're hearing from a lot of clients is that we're just going to steer clear of France, but this is not a Euro-wide issue. We're interested in Germany. We're interested in assets across equity markets across Europe, but just not France for now. And the expectation is that France will be the outlier and trading more like a periphery than a core market for now. And that seems to be just expected and accepted for the time being. But in terms of spillovers, if I was a business person thinking about investment, I wouldn't necessarily be looking at long-term French.
When you look at the politics that could move the dial here, Sri, I mean, he could appoint a prime minister from a different part of the political spectrum, but it seems difficult to understand why they'd be motivated to take that kind of job and make it successful under a Macron presidency. So all roads lead at some point to another election. I mean, they will eventually, within 2 years.
Eventually, yes, within 2 years. There is a risk of that, but I think the problem that Macron faces is that Ensemble is trailing behind in the polls, and if they were to call an election now, then the far-right parties would make a meaningful increase in their number of seats. So I think that would become, just make the bill-by-bill basis that they're proceeding at the moment would just become even more difficult. So an election just would set everything back further, I think.
I'm looking for catalysts. Is Japan going to be a catalyst yesterday, big catalyst yesterday? 30 years seems to have gone okay this morning.
Yes.
Gold's kind of backing off a little bit on that. Do you see a period of calm now? What do you see in Japan? And is Japan going to provide another catalyst? What's the BOJ going to do? What's happening in terms of finance? Just give me the shtick.
So I think markets were obviously surprised. They weren't expecting a win by Takeuchi. So, but what I would point out is that her stance has really evolved over time. So I think the markets are just reassessing who is she. What does she stand for? And whereas in the past she is known as a staunch conservative, hard right policies. But she really favoured a consumption tax cut, which is very controversial. She's moved away from that. She really was quite vocal about the Bank of Japan, and she used, some very derogatory terms in the past about rate hikes. She's moved away from that as well. She had a very clever wording in that, yes, there is, constitutionally, the Bank of Japan and the government work together, but the Bank of Japan is responsible for monetary policy operations. So she made that distinction clear. Yeah. And to be fair, I think the Bank of Japan it's not just Takeuchi, in the past, prime ministers do wade in and say they should or shouldn't rate, and the governor will just ignore it.
Sri Govindan, senior research economist over at Aberdeen, joining us this morning to marry some of the economics and the politics. We thank you so much. Coming up on the program, we're live from the JPMorgan Techstars Conference with an exclusive interview with the company's co-head of EMEA Tech Investment Banking. That conversation next. This is Bloomberg.
Tuesday the 7th, good morning. 30 minutes to the start of equity trading here in Europe. Futures are painting a fairly mixed picture at the moment. We are slightly negative across the pieces. You can see the 50 futures are down by 0.2%. It's going to be interesting to see how London trades today, in as much as we are seeing gold pushing higher. Plenty of miners in London. You've also got an update from Shell this morning. Very positive on trading. Pay attention to that. US futures a little negative as well. Nasdaq futures down by less than 0.1%. Kriti, what are we seeing in the bond market?
Well, I think our focus is firmly on what's going on in France, and not that much action. Yields are only higher by about, we'll call it 1 basis point, and even that's being generous. The German 10-year, not that exciting either. But we'll see if it starts to shake out. We did see quite the market reaction yesterday, so I wonder if perhaps there's a little bit of a retracement when it comes to the bond market.
Yeah, absolutely. So we'll continue to watch that with French politics very much in mind. Will UK politics play into the tech story today? Today, the UK Chancellor Rachel Reeves is set to host a roundtable to discuss the environment for IPOs in the City of London. This as the Treasury examines ways to make listing in the UK more attractive after the capital slips out of the world's top 20 IPO markets. That will be a story that will no doubt be discussed at one of the gatherings that we are monitoring for you. More than 500 industry leaders and investors are gathering at JPMorgan's Techstars conference in London to explore the industry's outlook. Bloomberg anchor Tom McKenzie is there for us, taking the temperature. Tom, good morning.
Yeah, Anna, thank you very much indeed. It is the 13th JPMorgan Techstars conference here in the City of London. Very pleased to say, to kick things off, who better than to speak to Matt Gale then, co-head of Tech Investment Banking EMEA at JPMorgan. Matt, good morning. Thank you for starting things with us. As you talk to clients at the event, the 13th year, to what extent, and Anna was talking about the IPO pickup that we're starting to see, whether it's the Swiss Market Group or Klarna or others, is that front and centre for clients at this event? And do you think that these are companies taking advantage of a small window, or is this a more sustained pickup in IPOs?
Yeah, well, first, thanks for having me on the show. Really excited for the first day of the conference this year. And exactly right, IPOs are back in the frame. I think last year and the year before, it was about M&A. It was about staying private for longer. With the reopening of the U.S. tech IPO market, and then more recently with Swiss Marketplace Group going public here in Europe, it's back in the frame. I wouldn't say we're back in the camp where people are saying it's IPO at any cost, but it's more recently you're seeing companies saying, let's get ready to IPO. Let's be ready if the window is there for us. Potentially we'll consider a dual track exit versus previously you only started an exit process if M&A was going to be your goal. So I think with IPOs coming back, it's given optionality from an exit standpoint. And as far as the windows, we think this is going to be a window that's going to extend. We're still operating well below the number of average IPOs we see in a year. We'll do about 20 tech IPOs in the US this year. The average year is around 35 to 40. So there's room to run on this upcycle, provided the macro conditions are positive.
Okay, there's room to run. The macro conditions are important, clearly. And the pipeline into 2026 then is looking healthy on the IPO front.
Yes, absolutely.
Okay, and when we think about New York versus London, where do you stand on? We have the fintech names here in the UK, Revolut, the Starlings, the Monzos. Does it make more sense for companies like that with the brand recognition here to list in London, or is New York still providing that gravitational pull?
I think it really depends. I mean, most companies are going to self-select to one or the other. If you've got a global business, a very sizable exposure to the U.S., you've got M&A ambitions that are global, it's much more natural you're going to go to the U.S. And you just look at the two recent IPOs we've seen for European companies. Klarna established a very sizable U.S. presence. Comparables are listed in the States. Sizable number of M&A opportunities are going to be in the States. Very natural to go to New York. Swiss Marketplace Group, exclusively a Swiss business, fantastic business, not even going to leave Switzerland, let alone go to the States. Very natural to go there. And so I think you're going to see companies with a U.S. nexus. We're probably going to lean toward the U.S., even in the fintechs. Not all. But brand recognition is probably less of what's going to drive it versus what's your global exposure from a customer standpoint.
What do you make of the kind of fundraising rounds that we see from the Revoluts of the world, now valued at, on some metrics, $75 billion US, a bigger market cap than Barclays, for example. They had a fundraising, a secondary was part of that. Is that unique to Revolut, or do you see more of that becoming more of a sustained and ingrained theme for companies that want to stay private because they have access to that capital?
Yeah, I mean, I think Revolut's quite unique in that, one, the scale they built is absolutely astounding and really a testament to what you can build in Europe, even with a business for all the hand-wringing that goes on. It's really impressive what they've done. So not every company can go out there every 12 months and raise multiple billions at an ever-increasing valuation. But I think it is a signal of if you built a truly global powerhouse, you can do that. You have the optionality to go public or stay private. But even many of these companies have been staying private for longer are having those IPO discussions because of the value of having a public currency, from the value of not having to run a process consistently, letting the employees and early shareholders sell when they want to rather than every 12 or 18 months. And so if I look at our pipeline on a global basis, a lot of these companies have said private for longer are now saying private for a little bit longer. Let's start thinking about that IPO process. And maybe it's not 26, but it's probably going to be 27 or 28.
What's the role of private equity at this point? We're thinking about the massive deal done around EA, $55 billion? And of course, JPMorgan plays a big role in that, with $20 billion of financing. Is that something that becomes more of a factor? To what role and to what extent is private equity now playing a bigger role in this ecosystem?
Yeah, I think it probably goes underreported how critical private equity is. If you look at M&A in the last 2 years in technology, it was very much driven by private equity firms doing the acquisitions. The strategics were very much on the sidelines because of concerns about AI, their own valuations. And so private equity has become a huge buyer of assets, one from each other, but increasingly in the public sphere, as you mentioned, with the EA deal, but we're seeing similar things across Europe. But we're actually now seeing private equity companies focusing on the VC-backed companies. You used to have a VC-backed company, you had two exit routes. You took the company public. If things didn't go fantastically well, you might sell it to a strategic. Increasingly, private equity is coming into these businesses. They've stayed private for longer. They've proven profitability. Instead of doing your next growth equity round, why not sell the whole company to private equity? The founders can roll. You can build it into a 50 or 100 billion company instead of trying to do an IPO as 5 or 7 billion. So a huge number of private equity guys are at this conference actually meeting these VC-backed companies. And I think that's going to be a really interesting exit route for European tech companies in the next couple of years.
Very interesting. The Trump administration has talked about maybe getting rid of the requirements around quarterly earnings. Is that a constraint when we talk to some of the companies, some of your clients? Do they think about, is that top of mind in terms of when they think about a potential listing? And if they were to remove that barrier, if it is a barrier, would that be conducive, do you think? How much of that is part of the discussion?
I'd say it's a little bit of discussion. Anything that removes the reporting burden, the compliance burden, and allows companies to get public while focusing on growing their business is important. So whether it be moving from 3 to 6 months, already we have a bunch of the European companies where the requirement is only to report every 6 months, for instance, here in the UK. And that's viewed as a benefit, but no one chooses to go to the UK just because I can report every 6 months. So I think it helps lowering the regulatory burden, lowering the amount of reporting you need to do in your S1, your F1, or your prospectus over here. All these things add up to reducing the burden to go public, but none of them are a reason somebody's going to go. I actually think it's probably a bigger benefit for the already public companies who are, in many cases, managing their business to quarterly results rather than being able to make some of the bigger bets. And you hear a lot of the private companies saying that's a benefit of staying private for longer. I can do things that make sense in the long term, even if they hurt my short-term results. So hopefully, if we do make that change, that gives the public companies a little bit more opportunity to compete with some of the private companies.
Matt, I just want, I need to get your view on this, given how deeply you look at this space, the tech ecosystem and your bank of bankers, so 85 bankers in your team, finger on the pulse. When you look at the kind of spend that's coming through from OpenAI and others, but notably OpenAI, deals of almost $1 trillion this year, and question marks as to how they're going to finance that. Does that seem rational at this point? Is there going to be value destruction? Do we just have to assume there will be some capital destruction on the way to this new AI economy?
Well, I think the answer to both those questions is yes. Does it seem rational? Yes, if you believe in the power of AI and the amount of prosperity it can create, the amount of efficiencies it can create, and clearly all the companies, the people that are running those companies believe in that. And so if you believe that, now is the time to invest, to go after that opportunity. If you don't put spades in the ground, you don't put GPUs in a data center, you're going to fall behind. So it makes a lot of sense. At the same time, is there going to be a value destruction? Absolutely. Every time we see a boom in anything in the world, certainly in tech, people get left by the wayside. If you're a follower, you're making an investment too late, you've got a technology that can't compete, or you're backing a business plan that doesn't actually have revenue that's going to come to bear for all these investments. Absolutely. So people are going to lose money. They do in every cycle. But I think the overall optimism of AI is backing something that's truly a super cycle, and that's probably the biggest driver of the optimism we've felt in tech over the last 12 or 18 months, and we expect that to continue into next year.
Well, where do you think we are in that super cycle? It continues into next year, and then
Like every cycle, it's probably going to have ups and downs in the waves. It's really hard to say AI wave is going to come to an end in 26. If you look at the forecast for the future, you look at what to do. We're only just grasping the surface of what AI can do for society, for business. And so I think this is a super cycle that's got many years to run. Could we see a pause? Could we see some fallout at any point in 26 or 27? Absolutely. In fact, I'd be surprised if there isn't a bit of consolidation at some point in time. But I think the overall cycle continues. It should be a net positive for companies coming to the market for new capital formation. And so we remain very optimistic, even if you always have to have a bit of caution.
Ursula von der Leyen, European Commission President at the Italian Tech Week last week, saying Europe can compete and lead and in some places win on AI. Where do you think Europe's strengths are right now?
I think it's a couple-fold. One is just the talent base in Europe, and I think there's an incredibly strong university system and incredibly number of talent and a huge diversity of capabilities all across Europe. And you hear that consistently from U.S. companies that are coming here investing. The U.S.-UK tech partnership being announced, 2 weeks ago. People want to invest in Europe. They want to gain the talent. There's also an incredibly large population in Europe. It's actually larger than the U.S. So being able to address those consumers is really a power of Europe. And somebody locally is going to be better suited to do that in many cases than going to be coming in from the U.S. The final thing we hear a lot is retention. It's easier to hire and keep people either in a company you buy or somebody you bring into your business in Europe than in Silicon Valley, where the next startup is just down the road with a bunch of stock options to do. So I think leaning into talent, leaning into the consumer base, leaning into the loyalty of the employee base, that can really be the superpower for a European AI company.
Matt Gale, fantastic to get your insights at the start, of course, of the JPMorgan Techstars conference here in London. Co-head of investment banking on tech in EMEA, of course, for JPMorgan, Matt Gale. Guys, back to you.
Bloomberg's Tom McKenzie there, of course, at the JPMorgan Tech Conference. We thank you so much for bringing that interview. He's not done yet. He's got a fantastic interview coming up, the same location. None other than Jamie Dimon will be joining him, the JPMorgan chairman and CEO, from that conference right here in London.
OK, coming up, President Trump says US tariffs on medium and heavy-duty trucks will kick in next month. We're going to discuss the European impact. Plus, we're going to be talking about the other stocks you need to be watching into the European market open. 18 minutes to go. This is Bloomberg.
The various political parties continue to take a stance as though each had an absolute majority in the National Assembly. And in the end, I found myself in a situation where I was ready to compromise. But each political party wanted the others to adopt its entire program.
Outgoing French Prime Minister Sebastien Lecornu speaking as he announced his resignation after less than a month in office. I wonder if the job came with a pension. Anyway, French bonds under a little bit of pressure this morning. The political impasse in the country, obviously the big factor there. You're seeing a widening over Italy once again. President Emmanuel Macron has given his outgoing Prime Minister 48 hours for negotiation to prevent a deeper political crisis. Jean Debar from Bloomberg Economics joins us now. Jean, let's get your take on what happens next. You've been looking at the potential options of what could come next in France. What is top of the list?
So we think President Macron is currently trying to gain some time and that the negotiation will potentially ultimately fail. In that situation, we think President Macron has three options. The first one will be to resign, which we think is pretty unlikely. The second one will be to appoint a new prime minister, potentially from the center-left or potentially from a technocratic perspective, but he will face the same issues the previous government has faced in parliament. And the third option would be for President Macron to dissolve parliament and call for new snap elections, which will risk get the national rally very close to power.
Sean, does this impact business confidence at all? Are we seeing a real sentiment shift when it comes to the people who do actually want exposure in France?
I mean, the political situation has an impact already on the French outlook. It is weighing on business and consumer confidence. If you just look at households, their savings rate has been increasing a lot and is higher than pre-COVID. So it's really weighing on the consumption in France, but it's also weighing on business investments. We see a lot of businesses delaying capex, for example, and this is a key risk for the 2026 outlook. We currently forecast France to grow by 1% in 2026, but it is already at risk because of that increase or rebound in political uncertainty at the moment.
Jean, thank you very much. Thanks for joining us. Jean Delbar from Bloomberg Economics. Let's widen the lens, talk about the markets in 3 minutes. We're joined by Markets Live co-editor Morwenna Cunningham here on set with us. Good morning, Morwenna. Nice to have you with us. So let's talk about gold. It's actually, for a change, quite flat this morning, but it's been on a tear. Caught the attention of Ken Griffin, Goldman Sachs upping their target on gold for the end of next year. What are you seeing this morning of interest in the gold price?
Yeah, so as you say, it is about flat this morning. It's come off, but overnight it surged to fresh records, above, futures above, 4,000, and actually Goldman Sachs have increased their forecast for next year to over 4,900. These are sort of unprecedented times for the gold market, but that all comes amid this backdrop of extreme political uncertainty. We're seeing it in Europe with France, and whilst the US government shutdown goes on. So it's partly that sort of haven bid, but also at the moment, with the absence of fresh US data, the market is still pricing in a rate cut from the Fed, but it's difficult for people to know whether that's going to change. Now, that would be positive for gold. So at the moment, the momentum looks set to continue. Of course, I think the risk is that if we do start to get data back from the US, that could shift the picture. And actually, markets are starting to, put those haven bids somewhere else slightly. Again, this morning, we're seeing a rebound in Japanese bonds, and that is what's taken the shine off gold.
So is that the connection? Because what I'm also seeing is the dollar a little stronger this morning. Is it gold down, dollar up? Or is it dollar up, gold down? Kind of which leads?
Well, this morning, we're certainly seeing, dollar up, I suppose, as gold stagnates a little. I think there's other reasons for the dollar's strength. It has been a really bad story for the dollar so far this year. And I think attention is now moving from some of that sort of trade uncertainty that was weighing on it. And attention's moved elsewhere. Like I just mentioned, that political uncertainty in France, really, weighing on the euro, and other, in Japan as well, that's going to help sort of support the dollar. And again, in this sort of dearth of US data, there is the chance that actually rate cuts might turn out slightly different to how they're being priced, and that could also support the dollar going forward as well. So I think there's a bit of a recovery momentum there, but also it's taking up some of that haven bid that perhaps is coming from the gold, as you mentioned.
Well, speaking of haven bid, we went through the gold, we went through the dollar story. Let's talk about the tech stocks, because of course that functions as a defensive bid as well. Are we partying like 1999, as Paul Tudor Jones would suggest?
We do seem to just be going from, one high to another. Really quite huge rallies there. We've seen the S&P closed at a record again yesterday, and the Philadelphia Semiconductor Index, is up 6% just this month, since the start of the month. That's really quite astounding, and that's, of course, on the back of all of these deals, in the AI space, and we had AMD, with OpenAI yesterday driving the market. I think the question is how far this goes is everything's being driven by an abundance of news. So if we don't have some news, is there going to be the momentum there to sustain it? And as we were just mentioning, if some of these other uncertainties dissipate from the rest of the market, whether there's still that sort of frothy interest.
All right. Bloomberg Markets Live's editor, Morwenna Cunningham, joining us this morning. You get more update analysis from her and the team. ML Ivy Go is the function on your terminals. Go from the macro to the micro. Kind of stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with Orsted today after it managed to raise $9.4 billion in a rights offering that is critical for its future. It said that demand for the shares was extraordinarily high, and that will help it shore up its finances after the Trump administration's attacks on the offshore wind industry completely disrupted Orsted's business model. So we could see a boost in the shares there. There's been obviously quite a lot of weakness. We can see the massive plunge here in August when it announced that capital raise, and that continued weakness with the shares hovering near quite low lows for quite a while now. So we could potentially see this vote of confidence in the company provide that relief for Orsted this morning at the open. Moving over to luxury, where we've got a new note from Morgan Stanley on that sector. It said that it was a little bit too early to go all in on luxury, that there was still a hangover, a weakness to be expected in 2026. But within that, there are winners and there are losers. So Morgan Stanley upgraded LVMH and Kering to overweight rating and downgraded Prada and Hermes to an underweight rating. And that is because because of the burst of creativity set by new creative directors that LVMH and Kering will be benefiting from. Kering has already been outperforming its peers because of confidence in the new CEO's ability to really turn things around at Kering. So we'll see probably that continuing this morning. So let's keep an eye on that picture with those 4 key names across luxury. And finally, let's go over to truck makers after Donald Trump announced that 25% tariffs on medium and heavy-duty trucks will apply from November the 1st. So let's keep an eye on those truck makers today, especially Daimler Truck, given that it makes more than 80% of its U.S. trucks in Mexico. So let's definitely keep an eye on that today. The revenue exposure to North America is high across that sector. We have 30% for Volvo, 25% for Traton. So definitely an exposure there that will be thought about by the market at the open this morning.
Thanks, Chloe. Our equities reporter, Chloe Melly, of course, with the details there. So once again, we'll watch French stocks, as Chloe's been telling us. We'll watch that theme as it plays out. Certainly a big theme in markets yesterday. Energy was also a big theme in markets yesterday, wasn't it? And that was providing some upside where there was some for European stocks.
I'm going to keep an eye on the gold miners once again. Gold's nearing 4,000. Is that a key line in the sand? Do investors continue to pile in to names like Fresnillo? We'll watch that one when it comes to in terms of the London Open. Shell is going to be interesting today. It's making some really positive comments on trading, gas trading. Gas trading is... In some ways, you can think about oil companies as kind of banks with hydrocarbon business kind of bolted onto the side. Trading makes a lot of money. If they're doing well in trading, that's going to have a meaningful impact in terms of what the full year numbers are going to look like.
Well, I think it's really interesting. You just made a point there with Morena talking about the relationship between the dollar and the gold story. I'm curious as well, is there a dollar impact when it comes to the commodity perspective as well? Yes, they might take their cue from Shell, but if you continue to see sustained weakness in the dollar, does that reflect in the broader commodities picture, not just gold, but oil, natural gas, copper even?
Yeah, certainly something to keep an eye on, the relationship between those two. Yes, to your point, Guy, so Shell talking about significantly higher for its performance on gas and just higher for oil, but both of those moving in the right direction on the trading side of things. So we'll certainly watch any positivity there. So energy stocks were a big upside yesterday, but they were sort of outweighed by some of the negativity, certainly in the French market that we saw coming through. What B&M as well, this is a low-cost retailer in the UK. They're warning of weak operations, weak operational delivery on their UK business, and so that could be something that is on the move. That is it for the first hour of the programme. We will be back with the market open. Futures had been not giving us a huge amount of direction this morning. There's a little bit of weakness in there, but US futures, interestingly, coming off those highs, down 0.1% on E-minis. We'll keep an eye on those. This is Bloomberg.
Monday morning, good morning. Couple of minutes to go until the start of the opening trade, the start of trade here in Europe this Tuesday morning. I'll get that the right way around. Yesterday's US session dominated, of course, by OpenAI. We had the AMD. Did you see that share price? Oh my gosh, amazing to see another move like that. We've seen a fair few of them recently. Oracle. We also had the comments a little bit later about a whole range of other companies. All of that kind of came together to drive US markets up towards session highs towards the end of the day. Europe kind of went out here, got a little bit to price into the upside. That's why I think maybe Europe is as mixed as it is this morning. There's not a clear sense of direction, a little bit of positivity coming out of the United States, a little bit of negativity maybe coming out of Europe, Chrissy.
I think there's a real ceiling that's showing up in this market this morning because on the surface you aren't seeing much action here. It's virtually unchanged. But yesterday saw a decline of 1.4% in the French index. You would think futures would rebound just a little bit, and they've done the exact opposite, Anna. They are staying flat. It brings to the question if we'll see a more furious reaction in just a minute's time.
Yes, if Emmanuel Macron kicks the can down the road at least 2 days to Wednesday, and the market's going to give him that long to work out what happens next. In the meantime, we'll focus on some individual stocks. Orsted is one of those, raising 60 billion Danish kroner through a rights offering, trying to tackle the downturn that the business has been facing in the wind power industry, especially the political hit they've been taking in the United States, pretty severe. So we'll watch that one as it unfolds, as it starts trading today. Shell said the performance of its oil and gas trading operations has recovered in the third quarter. The division's performance described as significantly higher for gas and higher for oil, so all that painting a positive picture. And luxury stocks, Kering is the top pick over at Morgan Stanley. So with France in the backdrop, we will watch that sector, Guy.
Absolutely. Is Gucci back? That's the key question this morning that maybe we need to ask ourselves. French market's firmly in focus. We're going to watch and see how the CAC 40 opens this morning. I think just is worth remembering that SocGen goes ex-dividend today, so just be aware of that. So just factor that into your thinking. FTSE 100, keep an eye on the miners, keep an eye on the energy stock story this morning out of that market as well. You've also got some house price data to fold in maybe further down the market. So we'll wait and see what the other markets do. We're waiting, really, to be honest, to see how the CAC 40 opens this morning. You've got what is happening in the banking sector, you've got what's happening in the luxury sector, but you've also got the kind of the macro umbrella, of course, of the political chaos over all of that. So the CAC 40, to Kriti's point, doesn't recover. We're only up by less than 0.1%. We are up. We're not continuing to fall, but it's not exactly a vote of confidence in the French market this morning. Clearly, not a lot happening in Germany. That market fairly flat at the get-go this morning. The IBEX is down by 0.2%, but this feels like a market which is waiting for the next catalyst after a furious Monday. Tuesday feels a little bit calmer, but you know the next catalyst is on the way fairly soon. Kriti, what are we seeing in sectors?
Well, right off the bat, it feels like today is really a reaction to yesterday. And I say this on two fronts because your underperformers of this market are largely tech-based. So ASML, for example, is really taking a beating this morning. You're seeing a similar story with Schneider Electric as well. So a little bit of a back foot there. Several healthcare stocks as well also taking a little bit of a lower approach this morning. I'm just trying to see if we get these numbers down about 0.4% for the sector altogether. But you look at the upside, some of the luxury names and, of course, the energy names, we were talking about Shell earlier, really moving this market to the upside. So it feels like it's a tale of two very different stories. I'm not really sure, Anna, if I can quite find a theme or a thread in terms of this market, which basically means maybe everyone's just as sleepy as we are.
Just as sleepy, but perhaps eyeing a drink would be my conclusion this morning. The best performing sector this morning is food and beverage. Actually, no, just been replaced by energy. But food and beverage and tobacco, that's doing quite well. Anheuser-Busch and Barry Callebaut, so that heady combination moves higher this morning. Energy stock's doing OK, up by 0.9%. And Shell, of course, is one of the big drivers there. That stock up by 2.1%, as they upgrade the market's expectations for how the trading side of the business is performing.
As we said before, it's kind of almost like a bank with an energy company bolted onto the side. ASML is down a little bit this morning. On a 3-day basis, it is still up by 1.2%. Yesterday, it popped higher, gapped higher at this point in yesterday's session. We're unwinding a little bit of that, but we're not filling the gap versus yesterday's session. So on a GIP2, to use the Bloomberg parlance, we are still tracking quite sharply higher on this stock, so just be aware of that. We're fading a little bit, but we're still up by 0.7%. But it is one of the drags on this market this morning after a very solid tech session yesterday.
It's fascinating when we're talking about the dynamic around tech, because on the one hand, there's still a cohort of people in this market who are talking about it as a defensive play, as the next kind of renaissance, as the FOMO moment that you absolutely can't miss it out on and therefore buy any levels. And other people are calling it a bubble. And I feel like we've heard that narrative for quite some time. So who is right? Elise Baudois has all of the answers. Head of EMEA Research over at Citi joins us around the table. Elise, we're hearing two sides of this narrative. The tech story drove the markets higher yesterday. Just walk us through your take on tech.
So I think, Kriti, it's really important. First, let's look back at the last few months. Obviously, we've had a rally which has been all sort of even across various nations, various markets. And really, what we believe, we were just out yesterday with our view for the next quarter, and we really believe that we're likely to see consolidation. So, we're sort of mildly positive, expecting gains globally for about 5%. But what's really important is we believe it's going to be theme-based. So we don't expect, we've seen before very different outcomes for EPS growth. We expect that actually a much more broad-based growth. And I think AI is a theme that plays into that. And we expect probably a widening of the gains from AI across. So that's actually our view on AI.
When it comes to AI, there's also a question here of whether valuations even matter, because we're starting to talk about that in the defense place as well, maybe even healthcare a little bit. When I see tech, healthcare, and defense all drag this market down, which is what we're seeing this morning, I wonder if it's a valuation question. Elise, is that an appropriate question to be asking at a time when being short is very cheap?
And it is a question we get most days because valuations are stretched in these areas. Obviously, we are almost all-time high. However, I mean, that might not be true about Europe. Obviously, Europe in particular, you still have about a 30% discount to the US. The average was more like 15%. So you might have some opportunities there. The question is obviously the catalyst and where the true innovation is seen as being done. I think the way we interpret that is we will look at EPS delivery and earnings delivery. Remember, we round the corner, we have Q3. But looking into 25 and 26 delivery, we think the market is kind of priced for perfection. So we need that earnings delivery. There's no sign that we can't have it, but I think this is an important point to watch, i.e. these valuation can only sustain delivery. Now, I hear you're going to say, well, actually, how much earnings is there around AI? And actually, a lot of it is the future. But still, in a number of subsectors that are impacted, you need to see that delivery happening.
Yeah, so the earnings, you can see the earnings for AI in the companies that make the chip stocks, but are they yet to move along the supply chain, I suppose, and get earnings in? How quickly does that happen, Elise?
That's a very good question, and I think that's the one that my analysts are trying to answer sector by sector. So you have various AI trades. You have the enablers. You have very different positioning along the line. I think with listed company there is the temptation to always use AI as a cost-cutting opportunity. I mean, the narrative has been a lot. Outside of the pure tech sector, but actually, what investors are looking for is what is the actual upside, i.e. the potential positive opportunities.
We were having a nice conversation earlier on today about who wins and loses. I like to think about this as an everybody wins story, but there might be losers. So we were talking about if you're a business that sort of brings together travel options, do you still have a USP when you can just ask a large language model for some of your travel options these days? Where are you seeing sectors that are going to be seriously disrupted to the detriment of the incumbents?
So you have sectors that can be disrupted, but actually you may not like my answer because actually, unusually enough, it's not going to be a straight answer. Why? Because actually within sectors you will have winners and losers. I think that's how we tend to see things. I.e. there's not like one sector that can be completely wiped out. Quite the opposite. You have people who will morph. So actually, I'm unlikely to answer that question with a straight actually forget about this sector because actually this is the opposite. What we're doing actually at the desk is looking at each sector and looking at winners and losers. As you go along the supply chain, you cannot actually make calls that are sector-based. That's how we would think about it.
Okay.
Does a political crisis in France produce a buying opportunity, or should I be running away?
So this is obviously the question of the day. So we are now 1 month, more or less, after the last situation. What we said at the time hasn't changed, which is that the French market has priced in some volatility. We know that the spreads have stayed higher for longer post the snap election last year. They never really recovered. We've now gone to, I think I've seen spreads at 85. Okay, fine. I think we said that, if we have more risk, then they're going to widen again. I think what happened yesterday is important because, unfortunately, it depends where you're positioned, obviously, but it actually widens the outcomes, and obviously brings back on the table a potential snap election, a potential presidential resignation.
But if I'm invested in LVMH or kind of non-domestic facing French companies, do I see this as an opportunity? If the market gets cheaper, is that a reason to look at those kinds of stocks? Airbus, these kinds of companies that sell a lot of stuff in dollars, that sell a lot of stuff around the world, are they getting cheaper at this point in your mind?
So I think the European market is cheap, generally speaking.
Sure.
But we need to take a big step back here because, assuming, the CAC 40, 20% of it is domestically exposed.
Sure.
So 80% isn't. So you've got quite a wide choice if you wanted to think that way. Where we are is we think of the broader trade of Europe. And the trade in Europe was always going to be anyway more about Germany, about fiscal. And we were anyway positioned slightly away from actually luxury. And for some more trade internationally exposed names because of what goes on elsewhere in the world, particularly tariffs, etc., which are the other side of the risk. So actually, to answer your question, I would say that we remain where we are, and the opportunities probably remain in the space that we like in Europe. So maybe banks, maybe tech as well, but perhaps less consumer discretionary.
Okay. I thought yesterday's price action around the French budget was interesting, not just because of the knee-jerk reaction you saw on French assets as well, but to your point, the ripple effect. You saw Spanish assets, for example, take their cue from the French political crisis, because it's a very similar dynamic and similar coalition issues that they're facing. Does the political chaos erode any bullish momentum that for the majority of this year has been tied to the fiscal multiplier? Do those cancel out?
So I think the reframing this it's absolutely the question we had from investors yesterday, which is, does this French paralysis spreads and it starts to indent the European progress? I think, you have a very good picture in Europe, obviously, even Spain, Italy, Greece, even Germany, all relatively good economic news. France is really idiosyncratic, is our view. We do have a situation where, depending on the outcomes, we won't see those reforms implemented that are much needed and much asked by the market. So as we see that, obviously, we are going to have questions. But that said, there are options remaining. The key question is, how far do things go? I think there is a timing question, which I haven't seen or heard much about. But obviously, as you know, you can, even if there were a snap election, which is, I guess, at the moment, investors sort of concern, you can only have a snap election and then 12 months later a new election. And that is an issue in a way, because that really, really pushes things back for another year. And the reality is it's not obvious that actually a new election would actually bring a different outcome. So then we would actually move the problem away, which would be an issue for Europe then.
Talking of issues, does this translate into the euro-dollar? At some point, I think we're trading, 116 right now. You get a French political crisis blowing up. That number could change quite meaningfully, particularly as the ECB is coming to the end of its cycle. The Fed may be doing more cuts. You could potentially kind of see a shift in terms of the way that things operate. I don't know. Maybe the ECB needs to do more. The currency has had a meaningful impact on performance so far this year. So what are you thinking about in terms of the currency as you fold it into your thinking for the next 12 months, next 6 months, next 3 months?
Well, it's obviously very important. I mean, the currency has been a tailwind, particularly when you think about this industrial reinvestment that we're seeing in Europe, etc. But I think, generally speaking, what drives the dollar-euro is perhaps less the European end of things and other things.
But maybe a political crisis could change that.
Potentially, I think we are seeing the key drivers, or at least at the desk, we're seeing obviously a normalization of the relationship. We were expecting anyway the dollar to sort of slightly recover. Okay. But I think from a low base, obviously. But I think there are other dynamics. I heard earlier this morning, obviously, talks about gold versus dollar and the dynamics there. Also, obviously, crypto, etc. So stable coins, all of these drivers are bigger drivers, I guess, than just the straight relationship with the euro.
Okay, nice to see you. Thanks for stopping by to see us. Lise Bardot, Head of EMEA Research over at Citi. Core 6 looks like this morning. Let's just take you through some of the numbers we're watching. It's interesting to see defence names are actually on the back foot this morning. Tech is also on the back foot. I would take a look at a slightly elongated chart when it comes to ASML and Schneider. Maybe a little bit of safety coming back into the market. But luxury is definitely catching the bid today. It's been a difficult period. Caring, apparently the name you want to focus on, I'm told. Reading one of the notes, I'm forgetting who it came from this morning. But LVMH up very nicely on the back of that as well. Let's talk about some of the individual names that we are watching elsewhere. Energy stocks catching Chloe's eye.
Good morning, guys. So, let's start with energy stocks. And Shell is up this morning after saying that its oil and gas trading division recovered in this quarter after dealing with quite a lot of geopolitical volatility in the second quarter, which really impacted it negatively. So this is really driving the stock. And this is really good news for Shell, given that this particular division is a key profit driver for that energy company. Moving on to luxury, where you've mentioned that LVMH is doing pretty well, Caring as well. They were both up upgraded at Morgan Stanley to an overweight rating. Hermes was downgraded to an equal weight rating. It's not seeing as much weakness there. Kering and LVMH should be benefiting from a sort of burst in creativity led by new creative directors. And Kering has already been performing quite well over the last few months because of the new CEO that came in and this kind of confidence in his ability perhaps to turn things around at Kering. And so we have this vote of confidence in those two luxury names, and this is driving those two stocks this morning. Moving over to Rentokil. Rentokil is a pest controlling company. It was double upgraded at Berenberg this morning. It said that the prospect for organic growth were very clear going forward, and this is really driving the stock. We're up 3.8% for Rentokil this morning. And finally, let's end on two different stories for companies that make energy transmission cables. So NKT and Nexans. NKT was upgraded to a buy at Jefferies. Nexans downgraded to a hold at Jefferies as well. And we can see that reflected there in the shares, with NKT up 4%, Nexans down almost 3% because of those very different growth prospects, long-term growth prospects for those two firms.
Chloe, thank you. Chloe Melly from our equities team. I'll throw into the mix another stock we're watching this morning. This smaller company, B&M, a discount retailer. We mentioned it ahead of the open. They have announced this morning that delivery has not been great, or execution has not been great around the business, and so that is taking its toll on the share price. The share price down by nearly 14% this morning. The company is saying that the strategic plan will take 12 to 18 months to have its full impact. It's operating under a new CEO, only came into the position at the beginning of June, and this is as a result of the new assessment of conditions there at the company. Coming up then, we'll get to the Orsted story. Shares in that business are climbing higher after raising more than $9 billion to plug a financial hole. We'll have more on the headwinds facing the sector. That's next. This is Bloomberg.
Not exactly an exciting performance being delivered this morning by European equities. As you can see, some markets are up, some markets are down. Net, I think we're not going anywhere in a particular hurry. Yesterday was a day of catalyst. Today is a day of calm. Tomorrow, we'll see what happens. Maybe not even tomorrow. Maybe this afternoon. Who knows? Let's talk about what we do know this morning. Orsted shares are a touch higher. Only a touch, though, after the wind power company raised $9.4 billion from investors to address financial issues caused by a downturn in the wind industry and policy changes in the United States. The latter bit, I think we're being polite there. The company will use the funds to complete ongoing projects and stabilise its business. Let's go to Copenhagen now. Our bureau chief there is Sarah Siolin. Let's talk about the take-up of this, first of all. Take-up was 99%. Is that an indication that investors believe in the business model, believe in what this business is doing?
Yeah, this is definitely seen as a vote of confidence in the company after a really, really rough period. The Trump administration throwing a lot of uncertainty over some of the biggest projects in the US, and overall just a lot of headwinds in the industry. We saw that the take-up was extraordinarily high. That's what the company said themselves. So now they're just really on a path to look forward. I will add, though, that it wasn't entirely unexpected to see this rights issue completed successfully. The Danish state owns 50.1% of the company, and they had already said that they would back it and take up their share. The same goes for Equinor. They own 10%, and another of the big shareholders has also thrown the weight behind this. So we knew that there was going to be a lot of support from the biggest shareholders.
And Orsted now, of course, aiming to refocus and some of their existing established European projects. Can you just walk us through the details of that?
Yeah, so now what they're really trying to do is narrow their business model and look at the European offshore projects. They're in the process of selling off some of their onshore projects in Europe, and they know that the US market, that was once seen as sort of this crown jewel for Orsted, where all the business opportunities would lie. They know that that's now laced with a lot of political uncertainty, and they can't really focus on the US the way they wanted. They'll try and complete the projects, but they're really focusing now on just like shrinking the business to some of their core projects. One of the things that we're really looking to now is how they're going to as they call it, right-size the business. We know that they're going to probably lay off a lot of workers. And in Danish media, they're saying they could probably lay off around 20% of their employees in the fourth quarter. So that's one of the main things we're seeing now. How are they going to look forward? Which projects are they looking to complete? Which one are they maybe trying to take on? And how are they really reorganizing their company after all they've been through?
Sarah, thank you very much. Copenhagen Bureau Chief for Bloomberg, Sarah Sjolin, with the latest on Orsted. Let's stick within the energy sector, but a different business, of course. Shell's shares are rising after the oil giant says the performance of its oil and gas trading operations has recovered after struggling with geopolitical volatility in the second quarter. The company's also taken a write-down on a shelved Dutch project, which we might get to. We're joined now by Bloomberg's oil trading Europe team leader, Alaric Nightingale, with us on set this morning. Good morning to you, Al. So let's talk about the upgrade to guidance. Is that too strong? I mean, they're certainly resetting our expectations around the trading part of the business this morning.
I think it offers a little bit more optimism. We had a pretty negative kind of second quarter perspective, significantly worse. And if we cast our minds back to the second quarter, you had things like the kind of brief war in the Middle East, and it was the wrong kind of volatility. So you had, you know, things that they just couldn't. They're very good at supply-demand fundamentals and all of those things. But and Shell wasn't alone, by the way. There were lots of other companies in a similar position, but they had the wrong kind of volatility. They maybe pared back risk a little bit. That's receded somewhat, so I think that's helped them to kind of improve their trading performance. It was significantly better in gas and better in oil.
In terms of how big an impact this will have, it always feels like these energy companies are slightly sort of trading companies with energy companies bolted on the side. I made that joke a little bit earlier on, and it feels like that on days like today. Is this the swing factor?
I think it's a really important kind of aspect to these businesses. I agree with that. And it's very interesting when it does well. Everybody rejoices, but it's not always.
It's like an investment bank. Like investment banks kind of swing in terms of their trading performance. The first thing we look at is how is trading doing, and it feels like that increasingly is the case with names like Shell.
I think it's always been there. It's always been a really important aspect to the business. Maybe we've seen some really important kind of volatility in the market, so it's more of a reminder of how important it can be to those companies, not just Shell, but BP, others, Total. So, yes, you're right, but I would say it's maybe the market that's reminded us of that and reminded investors of what they're in for when they buy these companies.
It's interesting, Total is up quite strongly on the back of this. Like people are making the connection maybe that the situation's better over there as well.
Yeah, there's an argument within the States, domestically speaking, that as you have this kind of AI build out as well, and we have this conversation on the show several times, the domestic use for both natural gas and oil will increase, and therefore the external flows will decrease, especially as the infrastructure is still left to be built out. Is there a question here of maybe Shell's outperformance and its peers' outperformance is based on the external outflow?
I think, maybe there's a gas element. Clearly AI is an important aspect for these businesses in the gas market, less so for oil. That's not such a big kind of consumer, but these things all ultimately feed into the energy complex. So on that level, that's an important aspect.
It was interesting. Bank of America was making this point the other day, saying buy tech on one hand, buy the UK market on the other, because it's got the metals companies plus also the energy companies. Yeah. And that's the kind of the barbell in the AI trade that they were talking about.
Lots to digest there. Bloomberg's Alaric Nightingale, we thank you so much walking us through some of the energy story from nat gas to a little bit of oil in there. I think we covered both sides of the Atlantic. We thank you so much. Coming up on the program, we're going to talk a little bit about the chaos in France. French President Emmanuel Macron under pressure to save his government after the prime minister resigned. Yet again, when you look at the French assets here, I think the expectation was that we would see some sort of rebound, maybe a little bit down, about 1.4%. I might be the minority in that. You are seeing underperformance this morning, though. The CAC 40 down another 0.3%. The rest of this market fairly stable. Also still waiting for it to show up in Eurodollar. We're looking still at a 116 handle on Eurodollar, although I admit slightly weaker against the dollar. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 30 minutes into today's session, I was hoping for a little bit more excitement, although I think maybe we got it right here in the French market. Only down 0.3%, but already you're seeing the dynamics start to unfold that the underperformer, the worry of the market, is really concentrated when it comes to France. The rest of this market feels kind of stable, feels kind of sanguine. Maybe this is after the blockbuster performance of yesterday. The FTSE 100 flat, the DAX flat as well. The Stock 600, again, Guy, really getting dragged down by what you're seeing in France.
The internals don't look actually that good this morning. If you take a look at what is happening, 191 up, 394 down. The breadth is definitely to the downside. The skew is to the downside in terms of the way that this market is operating this morning. Volume's all right. Volumes are kind of just above average in terms of what we are seeing. There's some interesting upgrades and downgrade stories that I think are probably worth focusing on. NKT is up by 4.5%. We've got an upgrade there. I think it's from Jefferies. Kering is up on the Morgan Stanley note. Luxury is generally doing actually fairly well, which is interesting in terms of what we're seeing in the French market more broadly. That is carrying the French market. The reason why France maybe is up today or not down today is because I think probably the luxury sector is doing better, and that's because of maybe the Morgan Stanley help on the upgrade within the luxury space. It's quite a heavy weighting. Remember that SocGen has gone ex-dividend today. Unipol's down, is up by 1.5%, 1.6%. All of these are 52-week highs this morning. There's a number of 52-week highs in the insurance space. B&M, if you want an idea of what is happening in the fast-moving consumer goods section of the market, don't often get to say those words, but this is it. B&M Europe, the value retail business, we seem to have missed off some letters. It is down a 52-week low, 45. The 45% down. The company CEO is painting a really bleak picture this morning in terms of what is happening here. If you are looking for cracks in what is happening with the consumer, look no further than what is happening here. The market has seen it coming and has tracked this stock lower. But the execution story around this business at the moment is poor. The CEO is highlighting that, and the stock once again is taking a significant beating.
Yeah, the new CEO pretty vocal there. Guy, let's take a step back and get an update on some of the big picture stories we're covering this morning. President Trump signals the door could be open for healthcare talks with Democrats, but still insists political rivals must allow the government to reopen first. This as gold nears $4,000 a troy ounce amid fears of a prolonged US government shutdown. Donald Trump and Brazilian leader Lula have finally spoken over the phone after a months-long standoff. In a social media post, President Trump hailed the talks as, quote, very good. Crucially, he made no mention of Jair Bolsonaro, whose trial on coup attempt charges inspired Trump to impose 50% tariffs on many Brazilian goods earlier this year. And the French President Emmanuel Macron is giving his outgoing Prime Minister Sebastien Lecornu until Wednesday to negotiate with rival parties and prevent a deeper political crisis. Macron's decision allows him to figure out next steps, which may include fresh legislative elections. Lecornu unexpectedly resigned yesterday, blaming stubborn political groupings for their failure to agree to a new cabinet. Kriti.
Well, let's get straight to the person who's been covering the story for us. Bloomberg's Caroline Conan joins us from Paris. Caroline, the situation is both evolving rapidly and maybe not fast enough. Walk us through the latest.
In fact, we had a very interesting comment over the past hour from Edouard Philippe. He's a former Prime Minister of Emmanuel Macron during his first mandate and also a candidate potentially for a potential presidential election. At the moment, this presidential elections is planned for 2027, but Edouard Philippe saying this morning that Macron should perhaps call for early presidential elections, name a prime minister as a caretaker for the next few weeks or few months, a prime minister whose only role would be to pass a budget, trying to find some compromise between the centre-left and the centre-right, and then President Macron calling for early elections straight after. That's an interesting call. We've seen a lot of people within Macron's camp distancing themselves from the president. Even the head of the Renaissance Party, also former Prime Minister Gabriel Attal, was saying last night on Prime Television that he doesn't understand anymore the decisions from President Macron. So clearly you are seeing here that President Macron is more and more alone, and in fact even in public opinion you have 70% of the French calling for President Macron's resignation. In the short term though, President Macron has so far denied he would resign. We'll see what happens over the next 24 to 48 hours. He's given Prime Minister, outgoing Prime Minister, I should say, Lecornu until Wednesday night to try and find some sort of compromise. Otherwise, Macron said he will take his responsibility at the moment. Most commentators are saying that he would probably call for snap legislative elections if there is no agreement by Wednesday night.
Caroline, thank you very much indeed. Caroline Conan in Paris. Let's move on and get another view on what is happening here. Maria Demirtzis, Economy Strategy and Finance Centre Europe leader at the Conference Board, joining us now. Caroline, just laying out the potential options that we are looking at. It looks like we're increasingly heading potentially towards snap parliamentary elections. My question to you, Maria, is do those snap parliamentary elections solve anything?
Yeah, indeed. We saw that back in June of 2024 when President Macron called parliamentary elections, and that was a gamble back then. It felt very much right about September, October that gamble had paid out. But now, a year later, we really see that it didn't. With 3 prime ministers, it is very difficult to find agreement. So it's not obvious to me what a parliamentary election will actually do. There are options that he could pursue without elections, looking for another prime minister. Of course, we've had 3 prime ministers that didn't work out. Maybe somebody from the left might be a little bit more palatable, or even a technocrat. We have some experience with technocratic governments in Europe, in other countries like Italy and Greece. This may give President Macron just the time he needs to get to 2027. But all of it, of course, will be disciplined by the market. So it is indeed an hour-by-hour story, if not a day-by-day.
Maria, in terms of the actual economic consequences of this political instability, are we seeing any? To your point, 3 prime ministers gone in a year, several more over a longer time frame. Yet investment seems to continue to flow into not just France, but broader Europe as well. When do we see the consequences of the political chaos?
There are difficult issues for France, the growth, of course, potential for France, but the fiscal position really is the big problem here. And in fact, where talks fail is exactly on the budget. And by the way, the clock is ticking when it comes to the budget. Originally, they needed to present a budget by October 13. And then give the parliament 70 days to discuss that. Of course, that's not going to happen by October 13. However, there is time still for some budget to pass. And, you know, that budget needs to reduce the fiscal deficit from over 5% to something that is much more palatable. The France is under the excessive deficit procedure of the European Commission, which means that the next budget needs to outline how France is going to bring its fiscal position to something that is more sustainable. This is not an easy thing to achieve. And, you know, the market will be looking very closely. We've already seen the spreads going up by a little bit. OK, we are still in the 1% category when it comes to the 10-year yields, but they're going up and they have exceeded Italian spreads as well. So the markets are looking very closely what will happen to the budget. And in fact, they're looking for solutions that will make the fiscal position for France sustainable. We are in...
Yes, Maria, I was going to ask you about the sustainability of that fiscal position, especially thinking about the populist tail risk. Is that the right way to describe it right now? How do you think that the market is going to start thinking about the possibility of populists in the driving seat and what that would mean fiscally for France?
It's not a new story. We've had that story in almost every electoral cycle in France, and every time we avoid the populist election. I don't think this time is different. What is different is indeed the economics of it, the fiscal position. I think that is what needs to be solved. And you know, if the current government and President Macron needs to find a much more convincing story when it comes to the finances. You know, with defense expenditure looming, this is only going to deteriorate. So it is absolutely important to find something that is palatable across the political spectrum. And maybe a technical government is what we need, just like the Italians experimented with it back in 2012 and managed to pass some difficult reforms. I don't know whether this is feasible for France, but we're running out of options.
Maria, there's a conversation beginning to start about kind of wider European involvement in this process. There is this sense maybe in the market, and I'd be interested to get your take on this, that the ECB has got France's back, that France is too big to fail, that ultimately the backstop exists, that the rest of Europe will rally round. Is that real?
It is real in the sense that it exists. The European Central Bank has an instrument called the TPI. It is an instrument that has never been used, and quite frankly, I'm not sure that it will ever be used. I think the reasons for invoking the use of the TPI are the same reasons why a country would go to the ESM, minus the stigma. The ESM is an institution that is accompanied by a lot of stigma, meaning that the country is, shut out of the markets. My view is that if push comes to shove, the country will have to go to the ESM. Now, the real question is, can the ESM make a difference? And here you see that the lending envelope of the ESM is not big enough to finance a big country like France or Italy. However, what we do also know is that when we come into big difficulties, the European Union always finds a solution. However, things need to get a lot worse before we get there, and of course that is a path that unfortunately we'll have to follow.
Maria, thank you. Thanks for joining us. Maria de Mertzis from the Conference Board. Let's bring in another voice on this conversation. Kevin Thozé, member of the Investment Committee at Carmignac Gestion, with a market perspective on what's been going on in France. Kevin, very nice to have you with us. Give us your base case as to what happens here now, because it does seem as if Emmanuel Macron's options haven't really changed. Does he put in another prime minister of a different variety this time around, or some other option?
Well, yes, it's very difficult to envisage that the current prime minister or resigning prime minister will be able to form a government within 48 hours, what he has not achieved to do in a bit less than a month. So base scenario here is that we get eventually towards snap elections. I mean, maybe we'll try to get to have kind of the fourth prime minister in a bit less than a year and a half, but it's very difficult to envisage why this would eventually work.
Kevin, when it comes to the actual spread widening that you're seeing, when it comes to France over for Spain and now Italy as well, they're, I think, eyeing several other members of Europe now. Does that actually have a ripple effect? I thought the price action yesterday was interesting off of the kind of sell-off you saw in French assets. You start to see it in Spain as well. Is there a contagion effect from the French political chaos when it comes to this bond market?
Well, yes, there is. I mean, higher borrowing cost means lesser investments down the road and lesser capacity to grow further out. I mean, if nothing is done, by 2027, the first line of spending for the French government will not be education; it will be debt servicing. So that's clearly an issue. So it shows in the real economy as well. I mean, when you're looking at small and mid-sized companies, their intention to spend, so to provide some form of investments, to increase basically capex over the coming year, has fallen as low as 38%. So that's very low as well. And I think likewise for households. I mean, savings rates in France are as high as 19%. That's huge. So what is this telling us, or what this situation is telling us, is that internal demand is very, very low. And so we're just kind of, making the situation worse. Basically, economic growth this year, economic growth next year is expected to be below potential, while at the same time, funding costs are expected to grow from an average of, let's say, 2% to as high as 3%.
Kevin, when do I start pricing in a RN government, and how do you think the market would react to that?
Well, I mean, again, our base scenario is that we do get to dissolution of the National Assembly, that we get legislative snap elections, and should this happen, then comes the usual race, or French usual race, let's say, of political alliances. Because if we get kind of, the similar parties campaigning on similar campaigns, then we just get to the same results. I mean, at the latest legislative elections, the National Rally was, so the leading party in France, got 33% of votes, and they have 140 members of parliament. You need twice this to have a majority. So, if we were holding snap elections tomorrow, potentially the stalemate would remain. So this is the uncertain bit, and we know that in the games of political alliances and in opinion polls, this is something which can scare markets off. If tomorrow, let's say, the left side of the political chess is awarded a significant or high intentions in terms of voting, then this is likely to scare markets off and could send those those French spreads, so the difference between the OATs and the bund up to 100 basis points, and that's our base case as well.
That's your base case, Kevin. So if we do end up with more legislative elections, if that does result in another stalemate situation, compromise seems to be required here in some form. It just maybe depends under whose leadership. Is that really the only question? And is it that need for compromise that is going to keep a lid on yields and on spreads?
Yes, but again, the situation today is very far from compromises. I mean, you were seeing an increasing numbers of head of political parties, among which the former, or 2 years ago, Prime Minister, so close ally of Mr. Macron, saying this morning that he does not understand what the strategy of Mr. Macron is. The first Prime Minister of the Macron presidency, Edouard Philippe, also running, let's say, popular political party, has said that he's calling for early presidential elections as well. So again, the compromise is more and more difficult to envisage. I think the only, or one of the only way out of it is for Mr. Macron to discuss with more the kind of left-centrist party, so the Socialist Party. But there again, the odds of this working out are very low.
Not much of a history of compromise in French politics. Kevin, great to catch up. Thank you very much indeed for laying out the market implications of all of this. Kevin Tozé, member of the investment committee over at Carmignac Gestion. Coming up, the former Italian Prime Minister Mario Draghi says we're entering into a new world order marked by geopolitical and economic risks. More on that interview next. This is Bloomberg.
Former ECB President Mario Draghi believes we're entering into a new world order marked by geopolitical and economic risks. He spoke to our very own Francine Lacqua about why he thinks a more volatile era is upon us.
Neither the US nor China do have this sort of experience of living together, which means we're going to live in a riskier world than we were 5 years ago. But it's also a special time when we see the rise of many new things, AI, which is transformational. I think the parallel with electricity when it came out is quite right. It's going to change all aspects of our society. And it's going to be a world where there will be new winners and new losers. And the winners are clearly the countries that already hosting high-tech, digital, like the United States, and in part, lesser part, Europe. But also the winners are going to be the countries that have natural resources, the rare earths. And the losers, well, the losers are going to be the isolated countries, the lost countries, probably Africa, most of the developing world. So that's another feature of this world.
What macro risks do you see because of this changing world where you also say that actually we don't know the blocks that will emerge in 5-10 years?
Well, it's a lot of macro risks because you have political risks and you have economic risks derived from the policies that have been put in place. The political risks obviously come from what I just said. I mean, the potential instability of this situation. So any change for the worse. Markets typically don't price this sort of risk. Markets price the risk that they can actually assess. They don't price structural shifts. Usually if you have a war, they price containment of the war. They don't price victory or defeat or big invasion, and so on. So today, I think we see only a small part of what's happening in market prices. And so that is one risk. But then we have risks, typically more traditional risks, like inflation. We have liquidity risks. Again, this generation, I think all of you lived in a situation where liquidity was exceedingly abundant. And it could, I mean, we learned, everybody who's lived through the great financial crisis knows that it's abundant until it's not. And it dries up quite quickly. And then you have risk connected to fiscal sustainability. And then you have risk connected to the downturn of China. Do we know whether this is going to be structural? How big is this going to be?
Former ECB President Mario Draghi speaking to our very own Francine Lacqua. Fascinating conversation. He's ringing the alarm yet again. Unclear if it moves the dial.
There's so many moving parts of this puzzle at the moment, trying to figure out where we go next. Like, Draghi's got a kind of really good view of what is happening and how the tectonic plates are shifting. There's plenty, though, that are shifting in ways that I think investors are still trying to get their arms around. Let's talk a bit about gold. Ken Griffin talking about the fact that gold is... He's worried that gold is taking over from the dollar as the kind of the safe haven asset. Normally, in times of stress, what do? Even if it's US stress, you buy the dollar.
Yeah.
Now you buy gold. Should he be worried, Val? Val's here. Is she worried?
Well, look, I thought what he was saying was really interesting because we know that gold has gone basically nuts since August, but the dollar has basically gone nowhere.
Yeah.
So it's funny that he is still tying this move higher in gold to investors wanting to de-dollarize, even though the dollar hasn't depreciated in this recent rise of gold. But, you know, for him, it's still more about investors wanting to get out of U.S. sovereign risk. He said that specifically. So I think he's also putting treasuries into that gap as well, that people just don't want to have as many dollars on their balance sheet. But it is remarkable just how much purchasing power has been eroded this year by gold. It's up over 50% in 10 months. So a really surprising run, and a lot of questions on just when it's going to turn around.
Right. So people are asking, when does gold turn around? People are asking whether AI is in a bubble. And, you know, maybe that doesn't matter. Maybe it's bubbly now, but continues to be even more bubbly into the future.
Exactly. And I thought that was something interesting we heard from Paul Tudor Jones, the famed macro investor, one of the most successful macro investors of our time, likening this mood to what we're in to October 1999. And while that might sound scary, he did mention that the NASDAQ essentially doubled between October 1999 and March 2000. So he is really seeing this atmosphere that ingredients are really in place for a massive rally, because he went on to mention about 1999, you know, the Fed was hiking. There was a lot of other things that were going on that are not happening today, that are even more loose today when you think about the Fed's cutting trajectory, you know, 100 basis points plus still priced in to next year. Maybe. So this is really an environment where he said you want to get on the fast-moving horses, and to him that mind is crypto, gold, and the NASDAQ.
Very quickly, the opposite, or the kind of Achilles heel of that case, though, is that in 1999, people weren't really understanding what the internet was. There wasn't this physical infrastructure build-out. Yeah. Could there be a case that maybe this time is different because you have the physical, tangible things to prove it?
Yeah, look, I think his point is that the very end of the bubble is still where you want to stay invested. The biggest bull markets happened 12 months preceding a bubble bursting.
I mean, Mario Draghi seems somewhat convinced, doesn't he? He was talking about AI being like electricity and we're having that kind of impact on the global economy. So we've had that conversation around this desk before. Valerie, thank you very much. Bloomberg's Valerie Teitel. A reminder that later today, Bloomberg's Tom McKenzie will be speaking to Jamie Dimon, JPMorgan Chase Chair and CEO, from the Lenders Techstars Conference. That takes place here in London. So that's a great conversation to listen in to. And meanwhile, Guy,
I've got the incoming and outgoing chairs of EQT joining me in the next hour. I'm going to be doing the Pulse. Fran, as you can probably tell, is in New York, so we're looking forward to that conversation coming up. European markets going sideways. This is Bloomberg.